Whenever a beginner asks me what is one thing they should learn in the market, I always tell them market structure. Why? Because it's simply the way the market moves. If you understand the way something moves, it's easier for you to go in the direction of that thing. Let's say, for example, you're going to the airport, you already have on your Google map the direction of the airport. Now you have the routes to get to the airport. All you have to do is to follow this route and it will lead you to the airport. So if you understand market structure, once you see a series of higher highs and higher lows, you already know that this is an uptrend. And when you see a series of lower lows and lower highs, you already know this is a downtrend. And if you see the market moving in sideways, you already know this is a consolidation. So if you have this knowledge, it's easier for you to go in the direction of the market. In today's video, I'm going to be breaking down my unique way of reading market structure, because I know there are a lot of ways out there to read market structure. And this system is what I've been using for the past 5 years. And also it's the system I teach my students. So if you want to learn more about that, make sure to comment below or send me a message on Instagram. Without further ado, let's get into the video. As I mentioned before, when the market is creating a series of higher highs and higher lows, that is an uptrend. And when the market is creating a series of lower lows and lower highs, that is a downtrend. When I mean higher highs and higher lows, when the market creates a push, this is called a higher high, and when it creates a pullback, that is called a higher low. So this is the term that is used when price is going uptrend, and lower low and lower high is the term used when it's going downtrend. Okay, so going downtrend pretty means price is going down, buying, selling. Okay, and when the market is stuck in a consolidation, pretty much when the market is going zigzag, going up, going down, no clear direction, not breaking structure or partially breaking structure, this is literally just called a consolidation. So over here, this is called a consolidation, and most times it's best not to trade this. When you see the market doing this, it's best just to stay out. Okay, so the other thing I wanted to talk about was some few notes I have about market structure. Okay, before I go for this, I'm going to show you something. So if you notice, the market doesn't go up all the way. So what I mean is, when the market goes uptrend for a while, it's going to switch to downtrend. So meaning the market doesn't go up forever, and also the market doesn't come down forever. So over here, if you notice, the market was going up for a long time. Pretty much I could have added more here, but the market was bullish, which is uptrend, and after a certain while, price started to switch from bullish to bearish. So that's where the change of structure comes in. So I'm just gonna write down real quick: change of structure. So BOS technically means change of structure. So over here, you notice the market was going up, and after a while it switched to bearish. So what I do is, personally, from my research, from my 5 years of trading, what I did realize is the first break of structure is not valid. It's pretty much a fake out. I literally call that a fake out, because this is not enough to literally validate that the market is switching from this bullish trend to this bearish trend. Okay, so what I need to see is, once price is going up, I need price to break the lower high. Sorry, I need price to break the higher low over here. So pretty much this low over here, that is called a higher low on the uptrend, right? So I need price to break this low on the first time, and then I need price to create a pullback, then break the second low the second time. So once price breaks this the second time, that's where I'm convinced that the market wants to switch from either bullish to bearish. On the other hand, what you could also say is, once the market is going up for a while, it wants to switch bearish. This could literally just happen one time, and then it just starts melting. A lot of traders actually trade like this, like when the market breaks structure, they are technically already bearish. But for me, for my system, the way I teach my students, I always tell them to wait for the second break of structure, because the second one stands as a validation. This could be seen as a fake out, while the second one could be like, okay, now the market literally wants to go down. So this is very important, and this is what I actually teach my students. So moving on, I'm going to show you a live example on the chart, but before that, I'm going to cover this. So this one I have is structure varies from time frame to time frame. What this means is that over here, if you could see, this is 1 minute, this is 5 minutes, this is 15 minutes, this is 30 minutes, this is 1 hour. So all of these are time frames. If I'm to go to the 1 hour, for example, the market could be on the bearish on the 15 minutes, the market could be bullish, which means it's going up, and on the 1 hour it could be going down. And also the reverse could also be true. On the 1 hour it could be going down, while on the 15 minutes it could be going up. And on the daily, which is a bigger time frame, the market could be stuck in a consolidation. But if you go to the lower time frame, you're going to see more data. Over here I have a lot of data from backtesting. But anyways, what I'm trying to say is that each time frame has their particular structure. You could be on the 1 hour and the trend could be bullish, and you could be on the 15 minutes, the trend could be bearish. So what I would advise is just pick one time frame from yourself and just trade that time frame. Personally, I normally trade the 1 hour structure, and also I trade the 15-minute structure. So just pick one and go with it. Or you could also do multi-time frame analysis. What that means is that you could understand the structure from the daily to the 15 minutes, and then you take your trades from there. But personally, I don't think that is necessary. Just stick to one time frame and you can catch beautiful trades. Moving on, the other one is uptrend, downtrend. This is what I just covered over here. And the most important one is the trend is your friend. What this means is when the market is going up, don't be looking for sales. When the market is going down, don't be looking for buys until the market gives you a clear direction that, okay, I want to switch from bullish to bearish. You shouldn't be changing your direction. If the market is just going up, you should be looking for trade to go up. And if the market is going down, you should be looking for trades going down. So that's technically what this phrase means, okay? The trend is your friend. When the market is going up, don't try to be selling. When the market is going down, don't try to be buying, okay? Don't catch a falling knife. To put everything together, I'm going to be doing a breakdown of some of the trades I had on gold over the last couple of days. And these trades were taken with supply and demand and market structure. So one thing you need to know is that market structure, you cannot trade it alone. You need to be able to add it with other confluences, which could be support and resistance, psychological level, supply and demand, whatever you have, okay? So over here, personally, I do trade supply and demand and market structure. So as you can see over here, slowly you could see that the market over here was technically bearish. This was the last lower low, and this was the last lower high. Over here, there was a fake out, the first break of structure over here, and then price created a pullback, and then there was a final break of structure over here. So if you know supply and demand, you know that supply and demand is pretty much the last zone before price breaks structure. I'm not going to go too deep over here, but what you could see is price came back into my supply and demand zone. That's how I got this particular trade. So it was structure, change of structure from bearish to bullish, and then supply and demand to catch this beautiful trade. And over here is literally just the same thing, okay? If I'm to continue within structure, over here we were technically bullish, okay, meaning price is going up. Price got over here, then came back to the zone, which was the last lower high since we are bullish. Price broke structure over here. This zone was taken over here, created a pullback, and then it broke structure again, okay? Broke structure again. Then I was looking at this overall zone to take a trade from. As you could see, it's literally just simple. Following structure can literally make you catch beautiful trades, but you need to be able to match structure with something. Could be supply and demand, could be fair value gaps, could be support and resistance. Over here, you could literally say this was a support zone. Price came back into the support zone or resistance zone, and then it got back and you take the trade. So first you need to understand structure. Once you understand structure, you just need to merge that with whatever you trade in. That's why I always push to beginners to really understand structure, because it's literally the way the market moves, okay? So over here, that was a beautiful trade going with structure, okay? The next one I'm going to break down is this one. This one actually took a while. I was looking at this and price was just consolidating for a long time, but it's pretty much just the same thing I've been talking about over here. We're currently bearish, going with structure. We're bearish over here, low, high, low, high. Over here, there was a break of structure 1, but price never created a pullback to break structure 2, okay? So technically, we are still bearish, okay? So price continuously went down over here. One sec, I'm just gonna go back. So breakup structure 1, but there was no breakup structure 2. Over here, price continuously went down. So the last supply zone I was looking at was this zone. That's where price came for to take this beautiful trade. And this one was literally supply and demand with market structure, okay? Over here, you could see that price tapped into the zone, then continuously break structure to the downside, which means we are bearish, okay? We just keep going down. This is low, this is high, this is low, this is high, the last supply and demand zone. Price came back into here around 8 a.m. and then I took this beautiful trade. So it just keeps going like so. Over here, this is the one I currently have. If you notice over here, I was selling and now I'm buying. And also I had this particular one that price literally just wicked me out. I was looking at this supply zone over here. This was on Thursday. I was looking at this supply zone moving with structure, right? If you notice over here, we are still bearish because there's no clear signs of price moving from bearish to bullish, okay? So over here, this is the last supply zone, high, low, okay? So this was the last one I was looking at. I had this trade on Thursday, but I was barely stopped out, and then price went to literally TP, but it's all part of it, okay? So over here, price broke structure.
and then it started to go up. So what I mean is price faked out over here, created a pullback over here, and then broke the high. So technically we are bullish. So over here, that's why I'm currently looking for buys. On the other hand, if you notice, this trade is still live. It's currently live. The market is currently closed right now because today is Saturday. I took this trade on Thursday while I was actually live on YouTube. So you could go check out that video. And yeah, this is literally just structure with other confluences, because you cannot trade structure solely. To take one thing from this video is that market structure is very important, but you cannot trade market structure alone. You need to be able to merge market structure with other confluences, which could be supply and demand, support and resistance, psychological level. But understanding market structure is the key to catching beautiful trades, because you need to understand the overall direction of the market. Then you look for confluences to take a trade in that direction. Okay, hopefully this breakdown was helpful to you. If you learned something from this video, make sure to give it a like, and if you're new to the channel, make sure to subscribe. Thank you guys for watching. See you guys in the next one. Bless.